We all know that sinking feeling when tax season rolls around. It feels like Uncle Sam is reaching into your pocket for another helping. But what if I told you there are ways to hold on to more of your hard-earned money? Tax deductions are like secret weapons, and one of the most valuable is the ability to write off your car. Writing off your car on your taxes doesn't mean you're getting a free ride, but it does mean you can reduce your taxable income. This translates to paying less in taxes. How does it work? You essentially deduct a portion of your car expenses based on its use for business purposes. Before you get too excited, let's talk eligibility. The IRS has rules, and you need to make sure you qualify. First and foremost, you can only deduct car expenses if you're self-employed or run a small business. Additionally, the car's use must be primarily for business purposes. Think client meetings, deliveries, or site visits. Commuting to your regular 9-to-5 job doesn't count. Now, here's where it gets interesting. When it comes to deducting car expenses for business purposes, you have two primary methods to choose from. Each method has its own set of rules, benefits, and potential drawbacks, so it's crucial to understand them thoroughly before making a decision. You have two options for calculating your deduction: the standard mileage rate or actual expenses. The choice between these two can significantly impact your tax savings, so let's break down what each entails. The standard mileage rate is a set amount per mile driven for business, set by the IRS each year. This rate is designed to cover the costs of operating your vehicle, including gas, maintenance, and depreciation. For instance, if the IRS sets the rate at 58 cents per mile, and you drive 1,000 miles for business, your deduction would be $580. It simplifies calculations, but might not always yield the highest deduction. This method is particularly beneficial for those who drive a lot for business, but have relatively low vehicle expenses. It's straightforward and requires less record keeping, making it a popular choice for many small business owners and freelancers. Actual expenses involve tracking all your car-related costs, including fuel, insurance, registration fees, tires, repairs, and even car washes. This method requires you to keep detailed records of every expense related to your vehicle throughout the year. Repairs and depreciation. Depreciation is the gradual loss of value of your vehicle over time, and it's a significant factor in the actual expenses method. You can also include lease payments if you're leasing your vehicle. This method can be more lucrative if your expenses are high, especially if you have an older vehicle that requires frequent repairs, or if you drive a luxury car with high maintenance costs. However, it demands meticulous record keeping and can be more time-consuming, but it requires meticulous record keeping. You'll need to save all receipts and maintain a detailed log of your expenses. This can be a hassle, but the potential for a higher deduction might make it worth the effort. Ultimately, the best method for you depends on your specific situation and how much you're willing to invest in tracking your expenses. If you choose the standard mileage rate, buckle up, because you'll need to track every mile driven for business. This means keeping a detailed mileage log, noting the date, purpose of the trip, and starting and ending mileage. Thankfully, there are apps available that can automate this process and make your life easier. Remember, accurate records are crucial if you ever face an audit. Calculating your deduction. Crunching the numbers. Once you've diligently tracked your mileage or expenses, it's time to calculate your deduction. If you're using the standard mileage rate, simply multiply your total business miles by the rate. For actual expenses, add up all your eligible costs. Remember, you can only deduct the percentage of expenses related to business use. So, if you use your car 70% for business, you can deduct 70% of eligible expenses. Claiming your deduction. Navigating the tax forms. Now the moment of truth. Claiming your deduction. When filing your taxes, you'll need to use specific forms depending on your employment status. Sole proprietors typically report business income and expenses on Schedule C, while those with other business structures might use different forms. Don't fret, the IRS provides instructions to guide you through the process. Real-life examples. Putting deductions into practice. Understanding tax deductions can be a game changer for many professionals, especially those who are self-employed or run small businesses. Let's dive into some real-life scenarios to see how these deductions can be applied effectively. Let's bring this to life with some examples. By examining these cases, you'll get a clearer picture of how to maximize your deductions and potentially save a significant amount of money. Imagine Sarah, a freelance photographer who drives her car to meet clients and attend photo shoots. Sarah's work requires her to travel frequently, and she uses her personal vehicle for business purposes. This means she can claim car-related expenses as deductions on her taxes. She meticulously tracks her mileage and uses the standard mileage rate to calculate her deduction. By keeping a detailed log of her business miles, Sarah ensures she can claim the maximum deduction allowed. This not only reduces her taxable income, but also helps her keep her finances organized. Or take John, a real estate agent, who opts for the actual expense method due to his high car payments and fuel costs. John drives a luxury car which comes with higher maintenance and fuel expenses. By choosing the actual expense method, he can deduct a portion of these costs, including depreciation, insurance, and repairs. Both Sarah and John benefit from significantly reducing their tax liability by claiming their car deductions. For Sarah, the standard mileage rate is straightforward and easy to track, while John finds the actual expense method more beneficial due to his higher costs. By understanding and applying the right deduction method, they both manage to keep more of their hard-earned money. This highlights the importance of choosing the right deduction method based on individual circumstances and expenses. Conclusion: driving home savings with smart deductions. When it comes to managing your finances, every little bit helps. One of the most effective ways to save money is by taking advantage of tax deductions related to your vehicle. Whether you're using your car for business, commuting, or even charitable activities, there are numerous opportunities to reduce your taxable income. Mastering tax deductions is like finding hidden treasures in your finances. These deductions can significantly lower your tax bill, leaving you with more money to spend on the things that matter most to you and your family. Imagine the joy of discovering that you can save hundreds, if not thousands of dollars, simply by understanding and applying the right deductions. By understanding the ins and outs of writing off your car, you can keep more of your hard-earned money where it belongs, in your pocket. This means more funds for family vacations, home improvements, or even just a little extra cushion in your savings account. The key is to be informed and proactive about your tax situation. Remember to determine your eligibility, as not all vehicle-related expenses qualify for deductions. It's important to consult with a tax professional or use reliable tax software to ensure you're following the rules and maximizing your savings. Eligibility can depend on various factors, including how you use your vehicle and the specific expenses you incur. Choose the deduction method that works best for you, maintain accurate records, and file correctly. There are generally two methods to consider: the standard mileage rate and the actual expense method. Each has its own advantages, and the best choice depends on your specific situation. Keeping detailed records of your mileage, fuel costs, maintenance, and other expenses is crucial for substantiating your deductions. With a little effort and knowledge, you'll be cruising towards greater tax savings in no time. By staying organized and informed, you can make the most of the deductions available to you and enjoy the financial benefits that come with smart tax planning. So buckle up and get ready to drive home some serious savings.